Ladies and gentlemen, the Asian stock market crash has now spilled over to the US tech stock, and the S&P 500 and the Nasdaq is falling. And the Nasdaq right now is negative 11% from its all-time high, and that's very serious. There are three main reasons why the stock market is crashing. And today, please watch till the end as I give you my take for this. I think is reaching a crash buying opportunity. So let's watch until the end. So yesterday, the tech stock fell quite significantly. The Nasdaq went down by 2%, and the S&P 500 went down by 1.5%. And this is probably just a teaser for what is going to come. So what triggered off yesterday's sell-off is largely three big reasons. Number one is that the interest rate was held the same by the Federal Reserve, and the Federal Reserve Chairman Kevin Walsh actually kind of stumbled during the FOMC briefing after the announcement of the interest rate, and the Treasury yields actually went up, in fact, to the highest level since 2007. So in some sense, the uncertainty and worries were being triggered by the Federal Reserve, and that's quite an unusual thing because generally the Federal Reserve is a icon or is a beacon of hope and for stability, but they kind of give the reverse. So the Federal Reserve did not increase interest rate. They held the interest rate at where they were. And that's been going on for some time already. But the market reacted as if they tightened the interest rate, tightened the financial condition for monetary policy. So why did the stock fall? Is because the investors are not convinced that the interest rate are going to stay for long, and they believe that the higher rates were likely to stay longer or even rise again. And that's very bad for growth stocks, especially tech stocks. So the bonds market, the Treasury market right now have surged. So the US 30-year Treasury has increased to 5.2% yield. Now, if you invest in the US Treasury, every year you get 5.2% right now for your returns. That's actually, to be frank, very good. But it also means that the borrowing cost for the US government has gone up. The 10-year Treasury has broke 4.7%, and this is a bad sign for the stock market because it means that whatever the corporates are earning in future will be discounted at higher rate, which means that the valuations will be lower, and therefore tech stocks are going to suffer the most. So why did the bond yields rise? The bond yields rise because the stock market don't believe that inflation is under control. Well, think about it this way. We've got oil prices shooting up. And by the way, the Americans have just started firing at the Iranians again. So all-out war continues. And the Middle East situation is escalating. We got the Bab el-Mandeb and the Straits of Hormuz all being blocked. So that basically signals inflation is going to happen. And the Federal Reserve is not giving everybody a guidance of what's going to happen next. So the Federal Reserve chairman came out and talked. I watched his talk. It was not very assuring. And he actually says that there's no magic wand in bringing inflation down. But he refused to clarify when rates would move, what condition would trigger. He did not give any guidance. And in fact, that's his new policy. He thinks that this is the new Federal Reserve. So as a result, the market interpret this ambiguity as risk, and therefore they decide by selling. So just to let you know, the FOMC Board of Governors, there are 12 of them. So all of them voted to see what the interest rate policy would be. 9 of them voted for a rate to stay where they are, and 3 of them actually voted for an increase in interest rate. So this is the largest dissent since 2016. And this is quite serious. So it means that the Federal Reserve actually now have 1/3 or 1/4 believing that interest rates should go up. And that's quite worrying for the market. So a divided central bank also signifies that there could be some risk moving forward. Clarity will not be that clear moving forward as well. So AI stocks continue to fall. It's really falling like crazy in Korea, continue to fall right now. In Japan and in Taiwan as well, is all going down. And now it's spilling over to the US. And I already talked about it in my earlier videos, how bad this is. And this is now extending further in the crash. So the Nasdaq right now is in negative 11%. And that's actually in correction territory. and the S&P 500 is following. The divergence this time is very big between the Nasdaq and the S&P 500, but I think this is clearly a sign that the market doesn't look very healthy in terms of the outlook. So question right now is the S&P 500 next to go into correction territory? Well, at this juncture, not yet. And for those people who are waiting for S&P 500 to crash, think there are early signs. These are early signs. Think there is nothing wrong to wait for a while, okay? But the opportunity is there on the tech side as well. So you have to make a decision yourself. Now, oil prices continue to be a serious problem. So the oil prices continue to go up as the war has no end to it. So higher oil prices leads to higher costs, higher logistic costs, persistent inflation. As a result, at some point of time, the FOMC, the Federal Reserve, will have to cave in and increase interest rate if the inflation doesn't correct. Now, this is interesting. I've told everybody a few videos ago that gold prices seems to be at an attractive rate. And I also told everybody where the prediction and forecast of the various institutions were. And yesterday it went up by 2%. Okay, 2%. And that's in line with all those forecasts as well. And I think this is something that for those who have bought gold when it was in the low, congratulations to you. Okay, I think that there's a possibility that gold prices may go up further. Okay, but that's something that we have to see. So now it looks like a rotation. Tech stock is going down, growth stock is going down, AI stock is going down, and now it's moving towards gold, defensive stock, more mainstream stocks, cash, and shorter duration assets and things like that. And this is a classic, what they call risk off. That means that I don't want to take any risk environment. Now, it doesn't mean the stock market will crash 20, 30, 40%. Some people have told me that I only buy when it crashed 50%. Now, you wait long. I don't think it will happen. Okay. So this is what I think. So what will happen next? I think we have to continue to monitor the inflation. The inflation is key, oil prices, and we shall see what happened in the September Fed meeting. But right now, the market is clearly pricing for higher interest rate for longer or even an increase in interest rate. And that'll be very bad for stock market. So my view, well, the crash buying opportunity is emerging. It's clear that it's emerging. And while I cannot tell you, because I'm not allowed to tell you buy or sell, but I think to me it's always wonderful when you've got dry powder and the market corrects, I think globally diversified portfolios are very healthy to accumulate some. Now, I just want to read everybody again that the most famous, most accurate, it's not perfect, but it's very accurate analyst, Tom Lee, he actually predicts that there will be a crash in 2026. And I've been talking about this possibility. Of course, there's a lot of people who don't believe because they say I just cry wolf. Well, the crash is here, okay? But what is more important is not so much the crash is here or not. It's up to you to decide. But what's more important is there will be multi-years bull run after this, according to him. And I've separately analyzed election cycles, and I came to the same conclusion as well. So I think that this is the time we monitor the market very closely, take the right action, right? For those people who attend my crash buying course, you have learned what to do now. For those people who haven't, make sure you know what to buy, how to buy, when to buy, okay, and so on. So if you don't, then you better get yourself trained in this area, okay? So now, before a lot of people say, but Mr. Lu, you can crash to 40%, 50%. Maybe, I don't know. I'm not 100% sure where you'll go, but I do know something. This is where Warren Buffett said, be greedy when other people are fearful. Now other people are fearful. What should I do right now is very clear. All right. I'll see you in my live stream. Okay. Thank you for watching and goodbye.